Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal and here's a look at the stories for the day.
इस बार मनाली चलते हैं।
नहीं गोवा।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI से ट्रैक्टर लोन लिया, पाजी ये 100% सही किया।
SBI is the banker to every Indian.
The Great Resignation, as it is known worldwide now, started somewhere in early 2021. Millions left their jobs during the pandemic for various reasons, including burnout. But in India's IT sector, where attrition peaked to 20%, the trigger was quite different. Most experts believe that it was due to the growing appetite for digital talent in the market. People equipped with futuristic skills like artificial intelligence, cloud, etc. have been quitting for greener pastures, giving employers a tough time. In our next report, we take a look at the skill sets which are most in demand amid this competition between IT firms and even startups.
India's $195 billion IT industry is increasingly making its presence felt across the world. In FY22, its revenue grew by $30 billion to reach the $227 billion mark. The industry registered an impressive 15.5% growth, and according to NASSCOM, it was the highest since 2011. The industry also added the highest ever 450,000 new employees in FY22, taking the employee base to 5 million. But even as it recruited a record number of new talent, the industry was besieged with an all-time high attrition rate. Just look at the IT bellwethers. At Infosys, on a last 12 months basis, the attrition rate hit a record high of 27.7% in the fourth quarter of FY22. Meanwhile, India's largest IT services company, Tata Consultancy Services, saw record attrition in the March quarter at 17.4%. And IT companies have been at their wits' ends doing their best to retain talent. Some resorted to novel ways to keep employees on board. According to reports, companies doled out salaries much above the prevailing market rates. Some even gave 100% hikes. Employee stock options were also being dangled in front of software engineers. Fintech firm BharatPe offered BMW bikes to new entrants. Techies who have a few years under their belt are now getting multiple job offers. Some IT companies, fintechs, and even startups have started delaying the payout of employees' performance bonus in a bid to delay their departure. Apparently, this gives the company more time to find a replacement. But why this churn? Experts believe that demand for digital talent has outpaced supply. The pandemic has also caused an acceleration in digital adoption. This, too, has contributed to the intense race for talent, not only from the IT giants, both global and domestic, but also from nimbler startups. But some experts also believe that this churn cannot continue indefinitely and that things will settle down sooner rather than later. However, the skill sets that were at the center of the talent race will still be necessary for any aspiring techies who want to make it big. According to the TeamLease Digital Employment Outlook report released last December, the IT BPM industry had set its eyes on digital skills in FY22, and among them, 13 skill sets were going to largely be in demand. In fact, they were expected to record a 7.5% growth in FY22 over FY21. Also, according to the same report, the demand-supply gap is widening for data engineering, data science, machine learning, and artificial intelligence skills. A talent solution and IT staffing expert Business Standard spoke to also emphasized on these skill sets.
In my opinion, if you talk about the skills which are very relevant and will remain in demand, for the next few years, they are artificial intelligence, machine learning, user experience designing skills, cloud computing, data analytics and data science, and cybersecurity. They are going for the experience range between 4 years to 8 years, because those are the resources they can readily be deployed on projects, and they can be productive and performing from day one. And the organizations are actually trying to tap that talent pool, and just to create their own capability and capacity. That is the focus, for the organization, laterally hiring these resources.
However, the IT industry, and in fact most businesses, are standing on the cusp of momentous changes, the effects of which are yet to be fully understood.
Some are skills that can be trained. So trainable skills are the ones that will naturally flatten over a period of time. You will have skills, technology skills around data, around predictive sciences, around modeling, around cloud computing, etc., etc. These are skills that can be trained. And with high demand for these skills, there are more people who are applying for these skills, have more training happening around these skills. So these skills will, that's why I was saying that over a period of time, you'll probably find these skills flatten out. The demand and the supply of these skills will broadly meet each other. And I don't know when or how soon it will be, but it will happen. The kind of skills that I feel there is a gap, and that gap will take some time to fill in, are more individual-centric skills. These are skills that can still be trained, but where the individual's personal capabilities, inherent strengths, come into a larger play than just a classroom training or an online training or whatever the format might be. And these are skills which I was saying is more on the area of being able to work in a more virtual environment, hybrid workplace or otherwise, whatever the case might be. Work will necessarily be more virtual than it used to be. And the ability to work in a more virtual environment is a ability to communicate, ability to manage, ability to resolve conflicts, ability to manage growth. All of those things in a hybrid work environment, a virtual work environment, is very different from doing that in a very face-to-face, in-person work environment. So that's one skill that I think will take time to build. The second is a skill capability, or whatever we would define it, is around how you have stronger design thinking capabilities. Now, design thinking capabilities, particularly from the perspective of how a user experiences a product or a service, and how the organization is able to design product and services, keeping the end user in mind. Now, all of those skills can also be taught. I'm not saying this can't be taught, but the excellent people or excellent individuals in those skills are people who will have more inherent capabilities than those who would have just gone through many courses. So therefore, that demand will always, to some extent, outstrip supply.
Clearly, techies will have to adhere to upskilling religiously. But what about the industry? At the end of the day, a company can either build the talent or buy it. But if the churn doesn't indeed subside in the coming year, could it be perhaps time for the industry to look at a third option? They may also look to borrow, so to say, talent by engaging companies that provide temporary staffing solutions. There will indeed be a dearth of digital talent that can keep pace with technology. Take, for example, the potential of the metaverse and the skills that it will require. With 5G becoming the norm in the coming years, the Internet of Things will also take off in a big way. The situation is dynamic, and thus it is hard to predict whether the same skills that are so in demand today will still be at the top 5 years down the line. They will remain relevant, no doubt, but will they still command the premium that they do today? Only time will tell.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Indian IT companies are indeed doing their best to retain talent. Meanwhile, Twitter too is doing its best to thwart a takeover bid by billionaire Elon Musk. The Tesla CEO has offered $43.4 billion to purchase the social media platform. But what if Musk manages to acquire Twitter? How will it shape his ties with India and also that of Twitter? Watch our next report to know more.
The world's richest man is in the news again. This time due to his offer to purchase Twitter, the microblogging site used by more than 200 million people across the world. Days after purchasing a nearly 10% stake in Twitter and refusing to be part of its board, Elon Musk has proposed an all-cash offer to buy out Twitter. Some experts believe that the CEO of Tesla and SpaceX, who has 80 million Twitter followers, refused a seat on Twitter board because he would have had to limit his stake to just 14.9%. Obviously, he had bigger plans. His proposal to purchase Twitter has shocked many. His proposal values Twitter at $43 billion, a 38% premium to the share price on April 1, the last trading day before his 9.1% stake in the platform was disclosed. The 50-year-old said he has sufficient assets to pull off the acquisition, adding that he has a plan B if Twitter's board of directors rejects his offer. He is worth $251 billion according to Bloomberg's calculations. But most of that wealth is tied to his stake in Tesla. So to get the $43 billion, Musk may have to sell the Tesla shares, or he may opt for borrowing against the shares. Meanwhile, according to a Reuters report, Twitter CEO Parag Agrawal has told his employees that the company was not being held hostage by news of Elon Musk's offer. Agrawal reassured his employees, saying that we as employees control what happens. A self-described free speech absolutist, Musk had slammed Twitter when it had censored Donald Trump 2 days after the attack on the US Capitol. Musk had tweeted that technology companies of the US shouldn't be acting as the de facto arbiter of free speech. For long, he had been advocating for uncontrolled internet. The billionaire has been outspoken about the changes he'd like to see at the social media company. He wants Twitter to open source its algorithms and minimize interventions and policing content. He said it was quite dangerous to have tweets be mysteriously promoted and demoted and have a black box algorithm. In March, he ran a poll asking users whether the site adhered to the principle of free speech.
It's very important for there to be an inclusive arena for free speech where all, Twitter has become kind of the de facto town square. It's just really important that people have both the reality and the perception that they are able to speak freely within the bounds of the law. So one of the things that I believe Twitter should do is open source the algorithm and make any changes to people's tweets. If they're emphasized or de-emphasized, that action should be made apparent so anyone can see that action has been taken. So there's no sort of behind-the-scenes manipulation, either algorithmically or manually.
Odds are stacked against him. But what if Musk succeeds in buying Twitter? How will it shape his and that of the microblogging site's ties with India? Musk has had multiple run-ins with the Indian government in the past. 2 years after he first announced that Tesla would come to India, this January he said the company was still working through a lot of challenges with the government. Musk had made no secret through Twitter that India's import duties of up to 100% on electric vehicles are among the highest in the world. Tesla had asked for a sharp reduction in import duties as a condition for entry, but India was not too impressed. Government officials said Musk cannot demand duty reduction without committing to manufacturing in India. His problems with the government extend to SpaceX, which runs Starlink. The satellite broadband service provider was pulled up by the Department of Telecommunications recently for offering Indian customers pre-booking opportunities. DOT put out an advisory warning subscribers that Starlink did not have a license to operate, violating telecom rules. And at the start of the year, SpaceX had to announce that it was returning to over 5,000 customers $99 each that they had paid for pre-booking. While on the other hand, the regulatory environment for social media companies has toughened in India, which last year introduced new digital rules. India is Twitter's third largest market, behind the US and Japan, with more than 20 million users. Twitter was engaged in a standoff with the Indian government last year when it refused to fully comply with an order to take down accounts and posts accused of spreading misinformation about farmers' protests. It argued that some requests were not in line with the Indian law. In the following months, it had blocked several tweets and accounts at the government's demand, including tweets that were critical of the government's handling of the pandemic. Last May, Twitter expressed concern over freedom of expression in India after the Delhi police visited its offices for adding manipulated media label to a BJP leader's tweet.
Let's look at a scenario where he does take over. I'm pretty certain, even though one can never be 100% sure, that he will be definitely pushing for free speech, because he's announced everywhere that that's his main motive to, in any case, own Twitter. Now, no government likes absolute free speech. No government in the world. The Indian government is no different. And in any case, the Indian government is particularly sensitive to criticism. In the past, while Twitter has taken certain bold steps, including blocking Trump, for some reason, I think it decided to back off. When it came to the Indian government. But I think that was then. In case Musk takes over, I think he'll be a different cup of tea. There is definitely likely to be friction if the government sees him as a threat, particularly if he's controlling a platform as powerful as Twitter, which to a large extent is used by everyone from the top to shape public opinion. He will definitely be seen as somebody who'll threaten the government. Once he's seen as a threat, then obviously he can expect some sort of a blowback from the government, which will impact also Tesla and Starlink.
In February, Rajiv Chandrasekhar, the Minister of State for Electronics and IT, called for global coordination to make big tech players accountable to communities. Chandrasekhar said the government's attempt to create some sort of sanity, rules, and accountability is being spun as a challenge to free speech. How Musk pursues his vision of getting Twitter to adhere to his free speech principles while satisfying the local regulations and the demands of the government will be an interesting balancing act to watch.
यार
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
It is not just Twitter. Markets in India are also anxious. Q4 numbers and rising bond yields kept the sentiment subdued last week. And street experts expect the upcoming trading sessions to be volatile for equities as earnings season take off in full swing with no ease in global headwinds. Our next report offers some insight into it. Equity markets ended the holiday-shortened week on a tepid note as rising bond yields coupled with expected monetary tightening, high crude oil prices and anxiety ahead of Q4 results back home weighed on the investor sentiment. The BSE, S&P Sensex and the NSE Nifty 50 indices declined nearly 2% in the 3-day trading week, while the Bank Nifty index managed to better the benchmarks with a loss of 0.8%. The Nifty IT index, however, tanked about 3% in the result-heavy week. And as the markets opened today, after a 4-day gap, it will have to factor in a host of developments in the world markets. Besides, it will also react to the earnings reported during the break, including that of Infosys and HDFC Bank. That apart, all eyes will be on WPI-based inflation numbers, which will be released later today. On the earnings front, Mindtree, ACC, L&T Infotech, Tata Elxsi, HCL Technologies, ICICI Lombard, L&T Technology, Nestle, Hindustan Zinc, Tata Metaliks and ICICI Bank are some of the prominent companies due to announce Q4 results this week. Globally, China's macroeconomic data, developments in the world markets and the Ukraine war shall be closely tracked. We have Gaurav Dua of Share Khan with us to give a sneak peek into this week's market moves.
We expect markets to be in a range. They have bounced back smartly from the lows of March, early March, okay? and they are trying to just consolidate in a range. And because of the quarterly number results, what we expect that there will be stock specific this volatility. But however, the benchmark indices I think could sustain the range.
From a sectoral viewpoint, here's how Vinod Nair of Geojit Financial Services expects the market action to pan out.
Will do well because one, the valuation is fair. If you look on a long-term basis, they are trading around the averages. The yield is increasing. Basically, their income will increase. And now their credit growth is also increasing. So basically, there will be multiple growth in the profitability. So banks, all the finance-related companies should do well. Similarly, I think some of the sectors were underperforming, like the insurance and all. They were also underperforming. So anything related with the finance, like insurance, also should do well. And the others, no, it is very difficult to comment now. Maybe these chemicals and all, they may be able to do because still they are getting good demand from the outside, and they are able to increase the prices of their product. And so the volume impact is likely to be limited because there is a big supply issue in China. So chemicals like that, they will be able to do well. But for the others, like including metals, there is a strong view that maybe this metal oil prices will consolidate over the next quarter. So if that is true, so these sectors will not be able to do well. So it will be a mix. So we will see a transition happening in sector to sector. Maybe money will move out from one sector to another sector. But overall, the outlook for the equity market is getting very mixed now. So a consolidation is possible.
Against this backdrop, technical charts suggest a trading range of 17,150 to 18,000 for the Nifty 50 index, with a support at 17,300 level. For the Sensex, tech charts indicate support at 57,700 and resistance at 59,000.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After tips to generate market-beating results, let's move on to the latest technology which promises to strike down aerial objects like missiles and rockets. The new laser missile defense system has now been successfully tested by Israel. It may sound like science fiction, but it is real. Directed energy weapons are a new generation of weapons wherein the projectile, if you can call it that, travels at the speed of light and with unprecedented accuracy. Let's know more about it.
Israeli Defense Minister Benny Gantz on Thursday told news agencies that in recent tests, the country's new air defense system had successfully intercepted and destroyed a range of incoming projectiles, from mortars and missiles to drones. We are talking of a new laser-based interception system called Iron Beam. Gantz has said that the system would be operational soon and will be deployed around Israel's borders over the next decade. The new system is designed to complement a series of air defense systems, such as the Iron Dome, already deployed by the country to defend against enemy mortars, anti-tank missiles, and drones. So, what is so special about this system, when many other nations are also pursuing such technology and effective anti-missile defense systems also exist? The answer could lie in the cost of operation. Israel has repeatedly claimed that its Iron Dome defense system is a great success. It reportedly has a 90% interception rate against incoming rockets. However, the system is expensive to deploy. According to a news agency, Israeli Prime Minister Naftali Bennett has said that someone in Gaza can fire a rocket towards Israel for just a few $100s. It costs tens of thousands of dollars for the Iron Dome system to intercept that rocket. Bennett has claimed that the Iron Beam is the world's first energy-based weapon system that uses a laser to shoot down UAVs, rockets and mortars at a cost of $3.50 per shot. At the current exchange rate, that amounts to 267 Indian rupees per shot. It's unclear how many shots on target might be needed to bring, say, an enemy UAV down if it were hardened against energy weapons. But it is still a significant achievement. In most Indian metros, you can't get a decent pizza for that amount. While sources differ on precise details, the Iron Beam is believed to have a maximum range of up to 7 kilometers and is capable of destroying missiles in around 4 seconds after its twin fiber optic lasers make contact with their target. The Iron Dome uses Tamir interceptor missiles to bring down rockets or missiles aimed at Israeli targets. Those interceptor missiles cost big dollars. Instead, the new system can light up a target with laser beam for a fraction of what the Iron Dome costs.
इसको 30 डिग्रीज कर देते हैं। अरे नहीं यार, 45 डिग्री सही है।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का वीडियो KYC सेविंग्स अकाउंट। Finally I agree.
SBI is the banker to every Indian.
Iron Dome was chosen as Israel's missile defense system in 2007, the same year Hamas took over Gaza Strip. Well, that's all we have for you today. We will be back with more news and analysis in our next episode. Stay tuned. Thank you for watching.
If you liked this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.